So our next question comes from Truett F. Truett says, "Good morning, guys. I discovered your podcast a month ago and I love it. I've been listening to all the old episodes to catch up and new ones as they come out. I'm still a baby investor and trying to figure things out. My question is, how do you know when something may have reached a plateau and it may be time to sell high or invest in a better opportunity? For example, in 2020, I put $1,000 each into MPC, XOM, and COP, and I've had great success with each of these names, growing 382%, 157%, and 172% respectively. But how do I know if these returns have kind of maxed out? Should I sell them and reinvest the proceeds into something more AI or tech related, hold on to these and slowly invest more over time? What's your perspective?" It's a good question. Robert, you want to kick us off?
Yeah, I love this. And I look at it this way. Take profits along the way is the most important part of this. So many people, they ride a stock up and they feel like it's getting frothy or it's overvalued, but they don't take profits along the way. So how I do it in my portfolios is once I'm up 50% on a position, I take 25% off the top. Then when I get up 50% again, I take another 25% and so on and so on. You also have to look at it and say, have the markets changed? Is this technology or this company going in the right direction for the future? Is AI going to take market share from this company? What's the total addressable market of this company moving forward? Because we do live in a fast-paced world where many companies that were great 5 years ago may not be great 5 years from now. And you have to be able to understand that to know where these companies are going. I do a lot of very long-term holds, but they're always with companies that I feel are going in the right direction for the long term, and they're not turning into antiquated companies who are just not growing in the right direction. That's the way I do it. You've done a great job so far, but you have to take profits along the way.
I love that answer, Robert. I think for me, it all comes back to why I invested in the company to begin with. If I invested into this company because I had a firm conviction that over the next 3 to 5 years, they're going to achieve X financial outcome, which theoretically would increase their stock price by X multiple, and it happened, congrats. I did what I said I was going to do. I'm going to close my position, realize those profits, and then redeploy them elsewhere in my portfolio. On the flip side, if that did not happen and I lost money, congrats, Austin, you were wrong. It happens. I'm going to close the position, take the money I have left, and redeploy it elsewhere in my portfolio. Now, this is again for like specific names and trades, right? But having a clear reason why you got in and a clear objective as to where you think it's going to go, where it makes sense then to close that position in your portfolio and reallocate the funds elsewhere. That's the key term. Reallocating the money. You don't want to just sit in cash. That to me is how I would approach this. Now, let me be very clear. There's a difference between having a entry strategy and an exit strategy on a specific position in a portfolio versus just buying relentlessly, dollar cost averaging into a ETF or single stock because you believe in it for the long term. I never plan to sell my Tesla stock. I never plan to sell my Amazon stock or my Microsoft or my Apple, like right things like that.
Right.
I 100% believe over the next 10 years it will be multiples higher than it is right now, right? So like that's not like a trade to me. But there's a company right now that Robert and I have been talking about for about 3 or 4 months called Oscar Health. Oscar very much could be a company that I own for 2 to 3 years, and then I get out of it. Hims & Hers is a great example of this. I wrote analysis back in 2022 why I thought Hims & Hers Health was going to go up dramatically. It very much did. I took some profits, redeployed it elsewhere, and then like that's how I've gone about it. So to answer your question, if this was an investment that you made specifically to make it, and then close it and redeploy it, rock and roll. If this is something that you want to like blindly just continue to relentlessly deploy money into because you believe in these specific names, rock and roll. But have a clear conviction as to what strategy you're following, right? We never want to just invest with no plan. That is a
Right.
recipe for success. Having an entry strategy and an exit strategy with these sort of like long-term trades per se, 3, 4, 5 years, is how people continuously make money over a long period of time when it comes to investing.
Yeah, I think that was great coverage because at the end of the day, I think the biggest thing people do lack is having that entry and exit plan and a strategy of why they're doing it. It's usually they hear a hot tip or they read a clickbaity headline and they just want to jump in. Understand why you're doing it and you will do so much better over the long term.